I'm Joel Berner, Senior Economist at Realtor.com. It's been a cruel summer in the housing market as August comes to a close, with buyers, sellers, and builders all unhappy in their own way. This week, we'll take a look at the challenges facing them in 2025. We'll dig into the numbers that have come out this week that show just how much they're all struggling, and we'll talk about the future of mortgage rates and how the current drama at the Federal Reserve might play a part. Prospective home buyers are experiencing a serious budget crunch. The monthly cost of a home purchase is over $1,200 more than it was before the pandemic, as high home prices and mortgage rates have lingered on. Incomes have grown over this period, but not at a rate fast enough to make home buying a reality for many. Home sellers are frustrated as well. 2025 has been the least seller-friendly summer since Realtor.com began tracking data in 2016, with prices stagnant and time on market steadily increasing. This dynamic is far from uniform nationwide, as many northeastern and midwestern markets still have not seen inventory reach back up to pre-pandemic levels, and many southern and western markets now have significantly more homes for sale than they did in 2019. Despite the inventory growth, pending home sales fell again from June to July. Builders are facing a double whammy of increased costs of labor and materials and decreased buyer demand. New home sales fell in July on both a month-over-month and year-over-year basis, and the median sale price of a new home is now almost $20,000 lower than the median sale price of an existing home. Builders are motivated to move inventory and have cut prices aggressively to entice buyers, but these compressed profit margins are leading them to pull back on construction activity. Watching the market this week, we see prices holding steady and inventory continuing to grow, but at a more moderate pace. The market remains sluggish, with homes spending a week longer than they did last year. Mortgage rates remained at a 10-month low this week, dropping 2 basis points to 6.56%, and further relief may be in store as all eyes turn to the Federal Reserve. President Trump called for the ousting of Fed Governor Lisa Cook in his latest attempt to assert control and lower short-term rates, but the instability created by the move actually has long-term rates trending up, which may undo progress on lowering mortgage rates. The Fed has been clear that it will not bend to the political winds, and instead will base its decisions on data like the Personal Consumption Expenditure Index, which came out today and showed inflation continuing at a pace higher than the Fed's goal of 2%. Finally, cash rules everything around Miami, as more than half of home purchases of over $1 million in the sunny South Florida metro are made without a mortgage. The luxury and ultra-luxury segments of the market are flush with cash-rich buyers, allowing sellers to wait longer for the right offer to come in. You can find all the details, including full reports in our housing data for download at Realtor.com/research. You can also follow us on X for real-time updates and Instagram for graphics.